Hi, this is Dave, and welcome to the weekly market recap, closing out the week of December, Friday, December the 27th, 2013. We're just about ready to close out the year here. If you look, recording this on the 28th of December, Christmas. Hope everybody had a fantastic Christmas. Christmas was on Wednesday, and let's see here, on the 31st, next Tuesday is New Year's Eve. And then we start the new year on Wednesday, the 1st of next week. So if you, I'm just going to jump over to the Dow futures on, this is a weekly chart looking at the seasonal tendencies over the past 5 years. So these are seasonal averages, and these are weekly up-down bars of the seasonal averages. And if you look at, the seasonal tendency, so we're on this week right here. So the seasonal tendency is to have strength into the end of December. You can see this is the month of December here. These last 4 bars. Let's see here. These last 4 bars. So you can see there's an up bias in these last 4 bars. Let me just change the color of the pen. And then as we get into this is January. Let's see. This is January. Now this would have been for the beginning of this year, but this is the seasonal average tendency. So you can see there's a little bit of a sell down typically, and then a push up into the end of January, and then I guess from a seasonal perspective, you get a low coming in somewhere around, let's see, this would be January, this is February, this is March. So if you look into the end of February, beginning of March, I guess you start to get a move into March, April, and okay, I just had to pause the video there for a brief second. So in terms of, I'm just taking a look at the seasonal tendencies on the Dow futures here, going into the end of this year here in December, and as Don Vialou often says, and I've heard him say myself, buy when it snows and sell when it goes. So you can see that played out pretty well this year, and the question really is, we've got a rally into the end of December with the Santa Claus rally, and the question is going to be, do we stay long into January, February, or is this seasonal tendency going to play out where, you sell off a little bit in January, and then, you look for a macro buy point at the end of February or the beginning of March. So I'm going to be keeping an eye on this. I don't think you can really fight the trend. As long as the trend is higher, there's no reason to really fight it, but it is good to be aware of these seasonal tendencies where, we might experience some weakness going into January, February. Now, that being said, if you look at what happened this year at the beginning of the year, it looked like the market was strong. So these are just, as indicated seasonal averages, and you really have to look at the price action in front of you. But it's good to, it's helpful to be aware of what might happen in the past. So I hope I haven't confused the issue there. Let's jump over. I just wanted to take a quick look at these seasonal averages just to see where we are and where we might be headed into 2014. So let's jump back to the more traditional charts, and let's take a look at the Dow futures on the daily chart. And if you look at, we've been talking about these targets between 16,400 and 16,700, somewhere in and around that area. Let me just change the pen here. So we've got 16,400 to 16,700. So you can see here we tagged the 16,400 level, closing out Friday with this doji on the day here, closing out Friday the 27th. So at this point in time, the beginning of, I would call this like a target zone. The beginning of this target zone has been met in terms of what we were expecting going into the end of the year. So if you look at a number of indications, our trending indicator is still, the trend bias is still higher. Stochastics are higher but overbought at this point in time. They're overbought, but as we've talked about, they can stay overbought for a long period of time in strong trending markets. And then if you look at, the MACD is still net positive. We've got very low volume here. except we had some a decent pickup in volume off of this low where we were saying, this might be a potential bull flag. That sort of played out. And then looking at the extensions off of this high to low, this high, this low, you can see that we tagged this 16,400 came in at the 1618 extension. And then if we look above us, I'm just going to need to clear this off. If we look above us, the 2618 comes in around 16,919. So if you look at even, a measured move off of this last, these swing points here, and you project it off, you can see that we get as high as 16,754. So somewhere in this zone, I think we could potentially go higher. But I am, keeping in mind that we've had a nice run, and I'm just looking to see if maybe we might be ready for a pullback. But having said that, I think that we've already met basically the 16,400 target. The question is, are we going to go higher into 16,000, 700-ish, or, are we going to get a sell-off into January? At this point, we don't know. The trend is still higher, but we are fairly extended from these moving averages. We're extended from the 8 exponential moving average. We're extended from the 21 exponential moving average. So at this point in time, we'll just have to sort of be aware of the seasonal tendencies for a potential sell-off into January. A sell down at the beginning of January. Recognizing that the trend is still higher. So I don't really, obviously I have a net long bias on this market, but I am aware of, what has happened in the past around this time of the year. That being said, let's take a look at the S&P. The S&P still looks higher. Potential targets as high as 1853-ish, using just standard technical analysis techniques, and we are overbought. Let's look at the NASDAQ. The NASDAQ looks higher. The charts look very similar. You do have, some divergences in the MACD. And let's take a look at the Russell. Now, one of the things that I was looking at in the Russell is the Russell looks overbought, and it looks like we might have a potential stochastic crossover here at the top of the range, right around 90. And one of the things I'm looking at in terms of a short-term high is this is a pattern that that I learned from Larry Williams. I think some people call it a shooting star, but if you look at here in terms of a short-term high, right in this area here, if I were to zoom in, you have a high, right, and then you have another high. This high is a lower high, in terms of the actual high of the bar is a lower high than this bar, and then on this side of the bar you have another lower high on this side. Right, and here's your high right in the middle. So from that perspective, the other stock indices have not done this, but the Russell has sort of put in this pattern here, this short-term pattern where you can see here when this happened, right? We got a bit of a pull down. When this happened here, we got a bit of a pull down. In this area we got a bit of a pull down. In this area here, we got a bit of a pull down. So what I'm wondering is, if we can get a move back down below the low of this high bar here, a close below the low of this high bar, are we going to get a decent pullback back into support, or maybe even back into this breakout area? This is the first and only real sign of weakness that I've seen in the stock indices in a little while, right? We've had this really big leg up. So having said that, let's just move on and just be aware that, we do have some seasonal tendencies of, a little bit of selling into January, but the trend is still higher, and I don't usually like fighting the trend. So I would just sort of stay put right now and look to see what happens going into January. Let's take a look at the Dow transports just to see if we can get a indication. I put in the wrong symbol there. The Dow transports still look higher, no indication of any weakness. It looks very much like the other markets. So let's jump into a couple of key currencies. Let's look at the dollar index. So the dollar index has been a little bit strange here. In the last couple of videos, I've talked about, we're putting in lower highs here. I'm sorry. We put in a low here. We put in a higher low here. We put in a higher low here. And look at these are signs of accumulation with these, really wide range sort of hammers where we sell down and then they get accumulated all the way back up. So this to me looks extremely bullish. The volume isn't huge. I mean, we did have a pickup in volume here. We did have a pickup in volume here. To me, this looks more bullish than bearish. But until and if we break above this trend line here and above 80.86, I'm still net negative on the dollar index. But, recognizing that we're accumulating, we seem to be accumulating the dollar index, or rather the dollar index seems to be being accumulated rather. I think I should describe that better. The dollar index looks like it's being accumulated off of these levels here. And we have, obviously some support down here. We have some resistance up here. It'll be interesting to see if we can break these levels here and get a push higher into, some of these higher levels so that the breakdance fight between the dollar index and the euro can continue. I mean, we're not really breaking any major ranges here. All we're really doing is, holding support levels, coming back into resistance levels. But to me, this looks like, we keep testing this trend line. We're being accumulated here. We might get a pretty decent push through this resistance level, at this point in time. I mean, that's what I'm looking at. And until and if that happens, though, that's really the decision point. Let's take a look at the euro. Look at the euro. The euro is at a key level here too, where it just broke above 138.28 and it came and it sold right off of there. So to me, this looks negative for the euro because we essentially, we broke on an intraday basis rather, we broke resistance, but then we sold right off from there. You can see the volume picked up a little bit. You can see the MACD is crossed lower, stochastics crossed lower. You've got divergences, across the board in all the momentum type of indicators here. And, this to me looks more negative than positive. So if we stay below 138.28, I think that, we may have put a short-term ceiling. We may have put a short-term ceiling in the euro here. But if we can get above that level, that would be a real game changer. But we have a potential ceiling here in the euro. So I'm looking at, resistance here and looking to see if we're going to sell down back into some, more major support levels, even possibly into this trend line. Let's just extend. Let's see. I think this is more the trend line in play here. Let's extend this forward. Extend right. Let's extend this forward as well. And we've got this sort of area of air or gap that we could come down to. So I'm looking at this, trying to look at this objectively and say, what really gravitates to my eye is that it seems like we have resistance, and I'm guessing we're probably going to pull down into some of those lower areas. So hope that makes sense. Let's look at the USD CAD. The USD CAD is still it's still in play. There's no real indication on, we do still have targets around 109, 110, somewhere up and around these levels up here, this 1618 level, this 1088 level here. When I say the 1618, I mean from an indicator perspective, that comes in around 109, almost 109 half. So, momentum's right in the middle of the range. Everything still looks, fairly positive here, even though we've got a bit of a divergence here in the MACD and in the stochastics. But essentially, as long as we stay above this trend line here, I'm still, more bullish than I am bearish on the USD CAD. So let's move on to, let's look at some of the metals. Let's look at gold. So gold, we were talking about a few weeks back. We were talking about this level to see, okay, are we going to break this this long-term low here, or are we going to hold this long-term low? If we break this long-term low, then I think I was looking at, if memory serves me, around 1,000 to 1,050 in terms of a target. And you can see here we've held this low over the past week, and we're pushing back into support. So the question really is is this going to be a dead cat bounce, off of this low and we're going to come back through it? Or is this a longer term low that we've put in here and we're going to start, sort of pushing into some higher levels? So if we look at one of the things that I did notice here, from a macro basis, I think this is really key here, is that, now let me just sort of zoom in. We've got the levels that are in play here. I'm actually going to make these a little bit stronger levels, and then I'll explain what I started to look at here. Let's make these levels a little bit thicker so they stand out. That way we'll understand they're a little bit more prominent than just a normal support level. So one of the things that I've been looking at is, and I think this is pretty key, I want to talk about, is the MACD is divergent off of this low, right? You can see here the MACD is, we've been putting in higher momentum here in both the MACD and the stochastics as we've put in a lower low here. This is a bullish divergence. I like to pay attention to these because I think that this could signal somewhat of a longer term low. So I'm cognizant of the fact that we put in sort of a major bullish divergence here off of this low, which was off of a key level, right? Which was off of a key level. So what I'm really looking at going forward for this to hold is, as long as we can, if we can start, let's say we come back up here, put in a lower high, and then we do something like this, right? And we can get back into some of these higher levels, and I'm more bullish than bearish on the metals. But if we come back down through this low and we chew through it or we crash through it, then I'm looking at 1,000 to 1,050. So those are really the decision points that I'm looking at. I think this is a key line in the sand zone here between 1181 to 1191. So we'll have to keep an eye on that, recognizing that, we do have some bullish divergences in play there, and looking to see what we might get going forward. Let's look at silver. So silver, you didn't really have bullish divergences here because, the price action went higher and so did the momentum. But, silver's starting to look really, really constructive here. And we're almost putting in like a triangle or a pennant here right at this, off of these lows. It'll be interesting to see if we're going to, break out of this sort of coiling action and push back up to the high side. If we look at the copper still looks very bullish to me. This is what I'd consider a busted pattern where we broke through and we failed to go lower, and then we broke through the high of this wedge. So to me, this is, and you can see here, the trending indicator here, I pay a lot of attention to this when we've been negative for a long time and then we roll back up to the high side. The same thing happened here. I discussed the other week in natural gas, and that was very bullish for natural gas. So if the metals are going to follow the copper, to me the copper looks like, even though we're overbought here in momentum, at least in terms of the slow stochastics, to me this looks kind of crazy bullish in the sense that, you've got the trending indicator pushing back to the high side after a long time being negative, and this busted pattern here where it failed to follow through, and now you just kind of go with the other side of that. So copper to me looks pretty interesting. I don't trade copper futures, but I mean I do use it as a gauge for other markets, and I'm gonna have to find an ETF that's tradable, that I can do some trading off the ETF. I just don't really like swing trading the futures market. But if you look at, we're right into resistance here around 341. If we can get above that, things I think will get pretty darn interesting. Let's jump over into, let's look at crude oil. I've been talking about crude oil hitting potentially this 50% retracement at 101.55 and hitting potentially $100 a barrel. You can see that we did put in a lower high here, and we did come in and push into $100, and we closed just over $100 a barrel. So I'm not sure if this is going to be, just a retracement of this down move into like 101, let's say 100 to 103.81, and then we're gonna fail some of these higher fib levels around the 618, or if this is the kickoff into a new sort of trend in the crude oil. So the way I look at this is I would say, okay, I think we could easily test some of these levels. This to me is going to be a key line in the sand at the 618. If we can get above, let's call it 104 decisively, and we hold that, and then we can get above 104 and we, let's say, push into 107, and we can break some of those levels, then I think we might get something really interesting going for crude oil in terms of higher prices. So I don't think anyone really wants higher crude oil prices, because of the implications of in terms of higher gas prices. But this is really interesting from the perspective of we're coming into these resistance levels, and we sort of figured that we had a bit of a low here when we broke this trend line, and the question is, are we going to really go much higher, or is this just a retracement of that, a normal normal market or a normal fib retracement of this down move? So hope that makes sense and that I've made myself clear there. Let's take a look at natural gas. So natural gas had this really, I had targets of $4.24, and we went much higher than that. We went up to $4, just above $4 and I guess 50 cents. Let's just mark this level here. We went as high as $4 and almost 59 cents. So the question now is, we've been trending higher, and the structure still looks good in terms of higher highs and higher lows. And we've come right into this 21 exponential moving average. So, and we're in an overbought situation in terms of both the MACD and our stochastics. So the question is really, one other point we were talking about, this situation here where we've been negative for a long period of time, and then we crossed over here in my trending indicator. So the question really is, are we going to hold this 21 exponential moving average? Are we going to hold this $4.24 level? I believe that this level is a key level now that we've been trading above it. You can see we broke above it. We congested a little bit. We put in a little bit of a hammer. I don't know if you can consider that a hammer, but we did here. We came back down, and we found support in this level here, and then you can see we're coming back down. So are we going to hold this level and push off? And are we going to get much higher prices in the natural gas, or are we just going to fail this level? So I think that if we hold $4.24, then this could get interesting here. Now, after moves like this, it's not unusual to go sideways for a while, and maybe do one of these where we go, up, sideways, and then continue like a normal sort of trend move. But this is interesting. I think this is really the inflection point here in the natural gas around $4.25. Let's call it, just to round it off. And I think if we can hold that, things could get, a little bit interesting in natural gas. And I think we've covered most markets, although there is one other major market I want to cover here. Let's take a look at the 10-year note. And one of the things that I've been talking about going back over the last few weeks is, we've got a really key level here around 3%. In my platform, it shows it as 30, but that represents around 3% in the 10-year yield. So that they work opposite the this instrument works opposite the bonds. So we're looking at interest rates around 3% here. So this is a really key level that I'm looking to see, are we gonna is this going to be a battleground? Is this going to be a line in the sand, or are we going to break this 3% level, which would indicate higher interest rates going forward? So, with the recent Fed announcements of, tapering, this could really signal, this could be the signal that, it's so hard to write with a mouse. This could be the signal that, interest rates, because there's less bond buying, interest rates could start moving higher, and bonds, conversely, could start moving lower. So this is, I think, really interesting. We really need to watch this level, and we need to see, okay, are we gonna break this 3% level in the 10-year yield, and signal that interest rates are ready to start moving higher, or is this level going to be defended and it's going to get smacked down? So I'm going to be watching this really closely over the next few videos and over the next few weeks, and see what potentially could be happening here. I think this is a major development that we haven't seen in quite some time. I mean, if I go back in the chart here, it's probably I'm gonna guess. Okay, so back in this area here, you can see this is a key resistance level. This was back in July of 2011. Between July and August was the last time we were in and around this area. So this is a multi-year event, and we really need to watch it. And I think I beat that to death. Let's take a look at the 10-year bond. Oops, wrong signal. TY. So if we look at the 10-year, we seem to be in this down channel, and everything looks negative, although momentum may potentially be bottoming out here. So we really we've got the 618 of this low to this high, and we're below that now. So the question is, we're at a really key inflection level for the 10-year bond and for the 10-year yield, the 10-year note. So let's watch this carefully. Let's take a look at the 30-year, and the 30-year here, it's just kind of struggling with support here as well. So this is this is really interesting. Okay, that's all I've got. Closing out 2013. So I think the big driver going into 2014, just to recap, we really need to see if the seasonal tendency in the stock indices are going to show a little bit of weakness going into January, or if we're just going to continue, this bull run that we've been seeing of, constantly printing new highs in the stock indices. And I think the other major development we need to look at is crude oil. If crude oil is going to get above, $104 a barrel. And I think the other major development is going to be, I think this is the real major one, is essentially what are interest rates going to do. Our interest rates, is the 10-year going to go higher? Are interest rates generally going to go higher into 2014? Have we seen a bottom in interest rates? So I think those are the, that being the most important, although I did mention it last, I think those are some of the key things that we have looking at, going out into the next several weeks to several months. So I'm going to wrap it up there. I'd like to wish everyone good trading and investing going into the end of the year and going into 2014. All the best into 2014. And another quick announcement, we do have an event coming up on, I believe it's January the 8th. Let me just see here. The second weekend, the second Wednesday of January, we have a special guest speaker that's going to be speaking at the CSTA Oakville chapter meeting. It's going to be, we're going to be ending off our trading and investing plan development series with this special guest speaker, and then we're going to be recapping things next month. So the month after, rather, back into February. So you're not going to want to miss this. I'm going to post out an announcement to all the groups that I network with. So stay tuned for that. And again, good trading, good investing going into the new year. Be safe, and we'll look forward to seeing you soon. All the best.